All right. Thank you, Marlon. Appreciate that. Guys, hope you're all well. I'm not sure how many of you were with me earlier on. We've had a beautiful time just tracking a few things in the markets. So we are going to pick it up from there. But welcome to this live trading profits. What I'm referring to is the Wednesdays at the market. The 5 hours we've just finished, 3 hours US European markets and 2 hours at the open of the Asian session. Okay, so I'm gonna just share my screen and let's have a look at one of the markets that we're actively looking at. Okay, so UK 100. I'm just gonna pop up the daily very quickly. So we had a look at what happened yesterday. Yesterday was a trading range. But remember, when you're looking at the market, you always need to have a look at the whole overall context and in particular the last 3 days. So yesterday, looking at the last 3 days, big bear breakout beneath this low of 2022. And that low itself was a pretty strong level of support before we had the breakout. Why would I say that? You can see the market tried to break through here 3 times. So almost like a micro triple bottom, if you like, and failed, and the bulls came back into the market. The bears created a lower high, this measured move here. Let me just move it out to this side, and I'll explain that shortly. Lower high, this high lower than that. And after the follow-through candle by the bears, again, before this was created yesterday, previous day, at that point, this looked like a potential double bottom being formed. Okay, that low and that low because of that buying into the close of the previous day. But then following day, market closed here, opened here, gap down, and huge selling by the bears, smashing right through the low of April. And whenever a level of where a level is broken, if it's a level of support, the market wants to test that. If it's a level of resistance after the breakout, the market wants to come back and test that. So we had this strong breakout. Yesterday, we had trading range price action, which is why we now have the low of yesterday, the high of yesterday. And when we're looking at market to a set, because it's trading range price action, what are we interested in? If it's trading range price action, we're looking at interest in trading at the extremes. Anytime you see a trading range, whether it's a 1 bar candle on the 5-minute time frame, when any time frame that you trade, you're interested in the extremes because it is a trading range. Tails on the top, tails below. Okay, small body. I mean, there's some perfect trading ranges created, and I'll show you very quickly what those were. So we look interested in seeing if we get a break, a reversal here, failed breakout of the high of yesterday, in which case we look for one of our patterns, which is a major trend reversal and sell it all the way back, but we didn't get that, and I'll show you just now. But the key level after that is this low of April 21. We broke beneath it, becomes a level of resistance. The bears smashed right through it with this candle, didn't get followed through, had a doji, but as far as the bears are concerned, they just said, well, breakout, pull back. This is going to be a lower high. That's what the bears are looking at, lower high. And if they get the lower high, then they'll continue to sell. Now, a couple of things before we drill into that on this chart, which you just need to have marked in the chart. Market created, let's move that around a bit. Okay. That low and that high. So you always want to look at the nearest trading range. So there is a trading range there. Excuse me. So once you see that, before all of this happens, you got to assume, well, if the bears break beneath that, how far do they want to take the market? They want to take it a measured move, and the measured move is here, which correlates with this higher low. So this higher low is likely to get tested. That's one particular scenario. Another scenario which we must then point out is if the bear case is true, and if this is a bear breakout, and we get a pullback, wherever the pullback happens, whether it happens today or tomorrow or coming up a couple of days, that also becomes the first leg pullback and the second leg down. So that becomes another hidden level of support that we need to mark on our charts. So we use the Fibonacci expansion tool. From that high to that low, okay, that's where the breakout ended. And depends where the pullback is going to be. So if the pullback comes in today and the market turns, that becomes the extension of that first leg. So the bears will be saying, hang on, we put in this big breakout here. So we're going to wait for a pullback, and there's a pullback, but we want to continue the selling. So the same extension we had on the leg one, after the pullback, we want the market to get there. So that if we turn here, it could be a measured move. If it goes back and tests the 10 EMA, I mean, it's a descending 10 EMA, depends where it is, we still have the measured move. So, you know, that we would put in after we have the, after the pullback has started. But just to indicate to you that from a bear perspective, they still want to get to that level, which is interesting because even them getting here still would not take out this the low that we have 2022 where we had this big reversal. So if the bulls, if you are a bull and you see this price action and you see a reversal, you're going to say, well, I'm not going to buy anywhere near. I'm going to wait until we get somewhere down here to their measured move, create a higher low and trade it. So that's just the theory, if you like, behind what we're looking at. But we know for a fact we have that trading range that we've broken through. So that is a key level that might pull the market down. So low of yesterday, high of yesterday, then let's go down to the 5-minute time frame. Okay, so we were looking at this earlier on. This is a high of yesterday. So our first port of call was, well, let's see if we're going to get a reversal at the high of yesterday. Let's see if the bears are going to defend the high of yesterday and give us a reversal. And if we got a reversal pattern, then we can look at trading it. But we did not get that. But what is interesting is what unfolded. Breakout candle. This is a breakout candle, the candle breaking above the level of resistance. And what followed immediately inside back candles is a failed breakout. Okay, a breakout is only successful if you get a breakout and you have follow through immediately after the breakout. Then you have a successful breakout. And if you have a successful breakout, then you're going to be thinking, okay, so I was trying to get a reversal here, but now the successful breakout, which, you know, it's the follow through candle must be a trend candle. So not a doji, but a trend candle, not a trading range. So that happens, and you got to be thinking, okay, I'm just going to change my whole thesis and see if the bulls are going to be strong enough for me to trade the pullback. But that failed breakout just gives us so much information, which we're happy with. So what are these numbers? These numbers are just, we're looking for wedges. We're looking for 3 pushes. So at that stage, you know, before all of this formed, we kind of said there was a 1, there was a 2, then we had that failed breakout. So that's our first attempt to go up. It failed. Second attempt to go up, and that has failed. And then this whole pattern is a third attempt. So talking of candles of separation, so 2 is probably this pattern. 6 candles of separation on the 5-minute chart. a pattern begins to hold for me if I see at least 6 candles confirming that particular position. So this is a wedge pattern. Why are we interested in wedge patterns? Because market is trying to do something 3 times. If it fails to do something 3 times, the 3rd time around, it might turn. So this is very good for our bear case. But now we need just more information, because here, although it's a reversal pattern that is forming, okay, although the bulls failed with that 2nd candle, the market is still above the high of yesterday. So we need a lot more evidence of the strength of the bears before we can take a trade. So we continue to see if we get a lot more information. That is now our present high of the day. So our count for 3 push patterns that again, because we say, okay, if that's a high of the day, the market pulls back, we've broken through this trend line. That's fantastic. So that's a break of a major trend line. We want to see if it resumes. And if it resumes and gets here, that becomes a 2nd attempt to break out above this key level of support that was broken through, now resistance. And if it turns again and creates a double top for us, then we are happy. We just want to see confirmation of bear strength and another attempt to resume the trend, which gives us a lower high. Then we can look to take a trade. So even say that wedge pattern 1, 2, 3, because we've started the recount, just to keep our charts pretty clean. So that double top is 1. We'll just bring it up here. Okay, so that's fine. We're happy with that. 3 attempts for the market to go up and failed. Now that high, we're going to restart the count. So these, you got to keep these on your charts. So that when you flip through, you can always just come back. Okay, so what we want to see, we really need to see strong bearish price action, because if the bears don't give us a strong bearish price action, we could just get a double bottom here. Okay, so the bulls can say, well, okay, we failed at our first attempt to accelerate the market up, but we are going to defend the previous high, the high of yesterday, by creating a double bottom. And if they're able to turn the market here and give us a 2-bar reversal, a low test reversal candle, then we know, okay, now we have a double bottom. So the bulls are able to defend that. Let's see if they can accelerate off a double bottom and give us a close above moving averages. We come back, we get a higher low. That's the question. What is the MAUU? So there's 2 moving averages. Exponential moving average, that's what I use. One here is 10. Okay, 10 moving average. Exponential, applied to the closes, and I just use a thick blue line. I use the 10 moving average because just from experience, I've seen it as a very close approximation of a trend, of a strong trend. 20 EMA for my pullbacks is key. So if you don't have the 10 moving average, let's just do that for now. What then you're going to be doing whenever you see a trend, you need to put your trend line in. Okay, so you have to continually be putting your trend lines in. And keeping them on the chart. Okay, so you know I had a bull trend, so that's a break of a trend line, and that's just to give you one of our patterns, which is a major trend reversal alert. And alert means, although the trend is reversing, it may not actually reverse. Okay, the market may just pull back into a trend range and accelerate. But if it's going to reverse, then you want to be alert for a potential trend reversal, because we are looking in this case for the market to turn. So we are actively looking for a major trend reversal. Okay, so you'd have to keep that trend line in to see when it's broken. Then, okay, there is a break of the trend line. Sorry. So that's your whole trend line there. Okay, break of the trend line, fantastic, which is one of the key ingredients in a major trend reversal pattern. You have a high that we've got here. You have a break of that trend line, okay, to test the moving average, which will be the 20 moving average here. When the market resumes again and starts up, we want to see if we get a double top here. So that will be step number one. Step number two, let's just put it in there. So major trend reversal has got 5 distinct steps. High, break of a trend line. So if the market starts off here again, that's number 2. If you get a double top, that's the 3rd. You can trade off number 3, which is a double top, but with a major move stop. Or you wait to see more bear strength to come to another new low, which is a 4 and a 5. If it forms, we'll show you. So that's what I use that for. Now, because you can end up with just so many lines on your chart, and you want to keep your charts clean, then just go and put back the 10. Okay, so pretty much approximates the strong part of a trend line, the strong phase of a trend. The other way that I use the 10 EMA is if the market is in a strong breakout, I don't trade the breakouts. I wait to see if I get a pullback to the 10 EMA to test the strength of the trend. If I get a pullback, low test candle reversal, I will trade it. So we didn't get that in here. Nothing for us to trade. So we are in a reversal alert. The good thing about major trend reversal alerts, earlier on in the Wednesdays at the market session, I was talking to the guys about we need to look for nested patterns, like a bird's nest, patterns within patterns. That's what we need to look for to confirm the strength of what we are looking at. So if we look at a nested pattern, that would mean one pattern is a major trend. I'm going to put it here because we'll come back to this so we don't forget. So you probably hear me talk about this a lot, major trend reversal. And I just call it an alert. So it has 5 distinct steps, 1, 2, 3, 4, 5. Okay, 1 is the extreme, with a break of the trend line, that's 2. And then 3, if we get a double top, that top and that top, and the market resumes down again, that becomes 3. If it gets to test this level or break beneath moving averages, and market turns, that becomes number 4, then we're just looking for 5 a lower high. So we trade off 5 with the tighter stop, or 3 with a measured move stop. Now, the other thing that we also look for in terms of patterns within patterns is excuse me. A wedge. A wedge is simply a 3 push pattern. 1, 2, 3. So a wedge is just simply any 3 push pattern. It doesn't look like a wedge. Most of the time, it doesn't look like a triangle, but you're looking for any 3 push patterns. These are confirming, if you're looking to go short like we are off this level of resistance, confirming that the bulls have tried 3 times, once, twice, 3 times to go up. And every time they've tried, the bears have come in and failed their breakout. So failed breakout, failed breakout, failed breakout, which means 3 times market has gone up. And when the market tries to do something 3 times, it will possibly come back and do something else, okay, because it's failed. So wedge pattern, and if it's nested or is part of the major trend reversal, it creates or gives us evidence of strong bearish price action. So let's leave this as it is, and let's see if we'll get a 3 here of the major trend reversal alert. Okay, a third step, which if we get that, would also correspond to first push up of another wedge. So there is one wedge, another wedge of the first push up, second push up, third push up. So the two of a wedge if you're trying to correspond things, the two, hopefully I can make it accurate. The two of a wedge, okay, would match with the 3. PowerPoint would be a little bit more easier. And the 3 of a wedge would match with the 5. Okay. So that's why we'd have a lot more confidence to take a trade if we have a nested pattern, because we're saying, okay, if I look at it purely as a wedge, I'm seeing the setup. If I look at it as a major trend reversal, I'm seeing the setup. So by the time I haven't taken any trades to the third push by the wedge, which is also the 5th step of major trend reversal, and it has set up for me, then I have to take the trade. So I've increased the probabilities of the market going in my direction. So we'll come back to this in a short while. The other market that we looked at was the Hang Seng 50. Now, what's interesting about Hang Seng 50 is that we had this double bottom setting up, and I'll talk you through this in a short while. With this double bottom setting up, so there was a bottom here, double bottom, distinct trading range. And all we were looking for was a higher low. All we are still looking for is a higher low. So just before this session opened, at about 1/4 the market reopened. And as we closed here, we were saying, okay, all the ingredients are in. For the first time, in a lot of bars, almost 2 or 3 hours of price action, the bulls were able to put candles above the moving average. Okay, above the 10 moving average, fantastic. Above the 20 moving average, good. So bulls are showing strength. And all we were hoping the market would give us is, a higher low, an attempt by the bears to resume a higher low. And if we got in the higher low, we would have traded. So, market closed, gapped up, but selling by the bears right from the gap up, which is not a problem. We are still looking now for the higher low. We'll probably look there first. That's a little bit thicker than I want my lines. Okay, why would you look there? Because there with a double bottom, there was a breakout above the double bottom. So the bears are going to likely defend that level. So if the market comes back here and gives us a higher low with that, that would be fantastic. If we get a setup here, then the stop has to be somewhere within this level. If we don't get it there and we get a perfect, almost perfect double bottom here, then that's our third touch. Then we have to look to trade that. Okay. So trading range has been formed, and we looked earlier on at the breakout and failed breakout and trading range behavior, two-sided price action, market going up, but in a two-sided format. What's two-sided? Bulls, bears, bulls, bears, bulls, bears. So yes, it's still going up, but it's not a strong bull breakout, so trading range. And if it's trading range price action, what you do in a trading range, buy low, sell high. With shapes. So trading range, you want to be selling high or you buy low. Anywhere within this region, that's the zones that you want to trade in a trading range. So we are looking at that and we anticipating seeing what we get now. A quick look. I need to look at Nikkei 225. Okay, so we're going to have to just wait. This level of resistance, here, now is a level of support. The bears are very keen to see that not breached. So the bears, this is a sell zone for the bears, but the bulls obviously want to defend the market above the high of yesterday. So that's become, from resistance, that has become support. That too referred to that. But we want to see if the market is going to give us a resumption, attempt to resume there and see if we get a double top, a lower high, whatever the variation would be. Okay. Let's just show you a couple more things. Well, I mentioned earlier on a couple of dojis that were set up. S&P 500 is a classic one yesterday. Okay, I mean, almost perfect. That magenta line is the open of the day. So with the market close, almost a perfect doji on the 5-minute or on any market. And what you do here, you got to wait for the extremes. You got to wait for this is trading range price action. And what you mentioned earlier on was channel, that high and that low, and you just extend it. You use your equidistant channel. And once you have that, this channel line, high, lower high, you have to find the low in between the 2 points, and that's where you anchor it. And if you had anchored it there, you would have seen that the market yesterday was an almost perfect test of that. Birds outside my window. Almost perfect touch of that. Okay, so the bears would have reached their initial objective, which is to get to the bottom of the channel. Okay, still a bearish channel. If you're a bear, you're saying, well, that's fantastic. Let me wait and see if we're going to go into a trading range. Okay, like trading range. But the objective for the bulls, okay, we've reached where the bears would have wanted to go. Let's see if we can turn the market. Bulls like to turn the market, knowing that we're in a channel, but a lot of opportunities for a lot of buying. But before all of that can happen, you cannot ignore the trading range that was created out of yesterday. So in that case, we're waiting to see what happens at the high of the trading range and also at the low of the trading range. And we kind of said, because this is S&P 500, huge volumes will come in when the market opens up. And also we have news coming at 2:30, which is 2.5 hours. So we still can trade until maybe 30 minutes before. But that's what you're going to be looking at when you get into the market. When you see that kind of price action, there's no need to be fighting the trading range until you get to the extremes, because you want to sell high, buy low. German 30. Okay, we want to see how we get. Just getting to an area where we'll be interested to drill down to the 5-minute time frame. Euro versus, spoke about that. Wedge pattern inside. Inside, interested to see whether we get to that high or that low. Okay, so it's the same thinking that we have on the Nikkei 225. It's really edging up to where we are interested. Okay, so we're going to have to keep an eye on this and see what the market trades for us. We've got I just want to quickly put up, I showed the guys earlier on. Oh, it's right on. Okay. I will show you just for a few seconds. Here's my PowerPoint. Okay, what we're looking at, we don't have the time for me to go through all of this, but suffice it to say, this is just the stuff that I create for myself on the monthly, end of the month. I do this on the daily time frame, but every day I look at the chart that I've traded and I make comments and notes on it. It's just as part of my own education. But what we're looking at now, part of my own ways of how to get better at this business. So what we're looking at now, maybe we're talking about wedges and major trend reversal. We're trying to look for nested patterns. So here, okay, that low, this was the low of 2021. So now this is a PowerPoint slide. So low of 2021, just like we have the low of April. And we have a wedge formation. The market went up once here, twice, 3 times, got up to this level. So that's a wedge that's been formed. But we also have another more horizontal wedge pattern, same one, same two. Before you had all of this formed, you said, okay, I think the market has turned here. Then we had this bull candle, tried to break out above that and failed. So before all of this formed, so now you'd have 1, 2, 3, you'd have 1 and 2, and you can extend that trend line, not knowing what is going to happen, but you know when the market gets to a key level of resistance. So at some point, it was a level of support became level of resistance, level of support, level of resistance, broke through. At some point, this level of resistance is going to be tested. We don't know whether the market is going to break through or pull back, but because of all these nested patterns that are forming around it, we can actively say, we can consciously say to ourselves, when the market gets there, I'm going to look for a major trend reversal, because I'm anticipating that all these forces, this level of resistance, that wedge potential that's been created now, that wedge potential, that's all going to reverse. And I want to try and get the major trend reversal at that stage and see if the market turns. Okay. So that's the reason we, let's get back to my charts. We build up all those major trend reversals. We build up, where did we have it? Okay, there, sorry. That's the reason we're looking at all these nested patterns. Now, another interesting market that's set up, have a look at it and see what we get. Gold, we spoke about gold. So when we were speaking with the guys, we were in this particular area, and we said, if we get a decent enough setup, we are going to look to trade it. So just as, what time was it? 5 minutes after we closed, we had this attempt by the bulls to accelerate, and then we had a 2-bar reversal. Now, when that kind of setup happens, after all of these patterns that we built in here, you have to look to take the trade. So I put a trade beneath a 2-bar reversal, stop above here. We've got to wait and see whether this stop is going to get hit or the market is going to accelerate all the way down for us. What's set up for us? just a lot of nested patterns. 1, 2, 3 pushes, micro wedge. That's a wedge that's forming within 3 candles. I mean, within 6 candles, 1 candle separation, 1, 2, 3. Okay, so it is a wedge, but it's a micro wedge. The bears failed to capitalize on that. The bulls attempted to break out again, go to this level. That level is the 50% midpoint of the range of yesterday, ROYD, range of yesterday. The bulls tried to break out above that, failed. Tried again, failed. Tried again, failed. So again, we had a wedge pattern, a micro wedge pattern now happening just adjacent to each other. So strong repulse by the bears. They're trying to make the bear breakout fail. Okay. Then we went into this trading range pattern, break of a trend line. And we said that high was the high of the day. So that's number 1. Okay. We had that lower high and we marked that as 2.1 as it was unfolding, and then we went 2.2. So both of these function as number 2, an attempt by the market to go up. And then we go to the third wedge, failed breakout. Also at the same time, we had a major trend reversal. Let's set in 3 steps, a high of the day. We just call it P, so many ones around. P1, Q, R, S, T. So there's nothing to it, just 5 steps. First step, high. Second step, break off the trend line. Third step, attempt to resume. Fourth step, bear strength we're looking for, moving average gap, but not quite as keen as we want. We want 120 EMA. But there were so many wedge forces that have been created here, which convince us that if we get to T5 and we get a reversal, we must look at, we watch that candle. That point I said, the guys, we take a trade, we must put our stop somewhere up here and let's see what happens. But inside candle, bear breakout, got to tell, the bears failed to capitalize on that. Bulls try to resume again, 2-bar reversal. Now, you don't know all of this is going to happen, but when you get that particular setup, you have to take the trade. And let's see what happens. If we get stopped out and set up again, we take a trade. If not, we just wait and see what unfolds before us. It's too cluttered for me to put up through the daily. I won't even bother. Okay, so we'll wait and see what happens. Hang Seng 50. Okay, market is accelerating down. So bearish price action, no problem, gap up, pull back. Let's see what we get when the market gets down here. Okay, that's what we're interested in. Are the bulls going to defend their breakout above this micro double bottom? At this level or here, this is the bottom of a trading range. We look to buy at the bottom of a trading range. So if we get in, we buy it, and then we just decide where to put our stop. So in case you're watching this, and you want to wonder, hey, where am I going to put my stop, George? So if we get down here and you get a decent enough 2-bar reversal, okay, you can look at a measured move of the 2-bar reversal. So let's assume this pattern repeated itself here and you want to jump into the trade. The high, low, measured move below, you put the stop. Why measured move? Because the market might just say, okay, double bottom, I'm going to try one more time to go to break beneath that level. And you don't want to get stopped out unnecessarily by a tighter stop. Avoid tight stops, find technical levels where to put your stops. Okay, let's go back to our friends. Okay, so we were open for a double top, lower high. We're not getting that, but that's perfectly fine. Why is that perfectly fine? Because we're looking for a lower high double top or a double top as confirmation of bear strength. So if we're not getting that bear, that lower high, and we're getting the bears still showing strength all the way down here, that's fantastic. But if you have a good look, at what's happening here. We don't as yet have a full candle that the bears have put beneath the moving averages, which just makes you ask the question, when will they show strength? Now we're back at the level of support, so we need to wait out and see what happens. Nikkei 225, we just have to wait. My Wi-Fi froze a little bit earlier on, so I'm not sure it's in my fiber. I'm now on a data dongle, which is still perfectly fine. Okay, so Nikkei 225. Again, we gotta wait. This has come off the test of the resistance level, the high of yesterday. Remember, we saw that. But we still don't have anywhere for us to jump into the trade. That is perfectly fine. I mean, that's good. Bear break, bull trend, we came back and we broke the trend line. That is a moving average gap bar. That's the kind of gap bar, the trade that we want to get. When the bears have put a close beneath the moving average. Let's see if we can get a gap bar beneath the 20 EMA. Okay, which would be fantastic. Then we want to wait for resumption and see if we get an opportunity for the market to go our way. If you are keeping track of this, just for the sake of it, you could say one. Oh, I don't know where the T came from. So that will be one, where the high of the day, we had a trend line break. Attempt to resume. We have a 4. And if you want to trade this, we would love to see a 5 up here. Okay, that's the pattern 1, the high, break, 3 resumption, 4 and 5. That's what we would like to see if we want to take this trade. Whatever 5 appears for us. Okay. Alternatively, we look at wedges. First push up, second push up. We want a third push up. Okay. Lower high, double top, whichever way it forms. And then we must just take a trade and manage our trades from there. Let's see if there are any questions. Okay, presently no questions coming up, guys. That's perfectly fine. Bitcoin, we had a look at it. Again, trading range price action, wait for extremes. German 30, we spoke about, wait for extremes. S&P 500, wait for extremes. All right, guys, we are coming close to the end of this session. For guys who are joining me, again, at the open of the US markets for Wednesdays at the market with George, it is in exactly 3 hours and 15 minutes if you want to just synchronize yourself. In the meanwhile, we just carry on watching the markets and trading. Thank you very much, Marlon. Thank you for managing this particular show for us. And we'll catch up with you guys 3 hours time. Cheers. Bye-bye.